The Banking Scene Director's Cut goes behind the scenes, sharing stories and insights to help you build the bank of tomorrow.
Welcome, everyone. I'm here with Joe. Welcome, Joe.
Hi, thanks.
We've been meeting up quite a few times lately, haven't we?
We've seen each other more than ever before.
Exactly. But thanks for taking the time again, because Bunq recently did quite a, I think, surprising announcement, but definitely an
Yeah.
announcement worth talking about. So
Okay.
Bunq recently announced Bunq as a service. And can you, as the chief evangelist of Bunq, perhaps briefly explain to our audience what this is about?
Well, let's hope that I can, given my job title. Yeah. So, in the simplest of terms, Bunq as a service is about extending our capabilities, our platform to B2B extension, so banking as a service in a sense, so that other companies who match sort of the direction and the purpose that we're on, I think that's a really important sort of parenthesis around it, can also extend that. So in simplest of terms, I think you know us by now, Rick, that we're quite obsessively focused on a group of users, a particular set of users. And that definition of users, we are looking to partner with other companies who want to extend that capability
So to
as
be
well.
specific, that is like the very people traveling a lot, but also very much focused on we want digital services. I want to make sure that if it works in the Netherlands, it also works in the States, it also works
Yeah.
everywhere around the
I'll
world.
be more precise. So we focus on people whose lives are beyond one country. So they are not just traveling, but living. So they either live in one country or are from another. They have family in another. They're on an assignment. They're a digital nomad, a
I
digital
guess
expat.
your family is the best example of that. And that gives you
We are
people perhaps also some
nomads.
context about why you're sitting in your bedroom.
Yeah, that's the context of why I'm sitting in my bedroom is I moved out of my office because our kids are coming to visit.
Exactly.
So, so the idea is, I mean, we are a family that has lived in 7 different countries on 3 different continents, and all 4 of our kids grew up internationally, although they're American. It's not their passport that they identify with. It's primarily the experiences that they had growing up, and quite a lot of that was here in the Netherlands. So the 2 youngest that are coming to visit actually think of the Netherlands as home, and they consider themselves, while American citizens, one considers herself Dutch Canadian, and the other one considers himself kind of Dutch American. And
Yeah.
that's because of the years they spent.
hmm So Bunq has always been a consumer, or mostly a consumer-facing bank. Why
Yeah,
did you
maybe
decide?
80/20 because we've always had a business to business. We have business accounts, but yes,
Right.
I think
A
it's
slightly
the
different
majority
approach
has
to
been.
compare to the bank as a service,
Yeah, fair enough. Fair
where
enough.
you are more of an infrastructure player rather than a service provider. Does this represent a new strategic direction also for Bunq, or is it simply another way of scaling what you've already built for the target audience that you wish to serve?
I guess in that sense, 2 things can be true at the same time. Right? So the idea of it's a strategic initiative, meaning we see it as an investment and a priority and something that we want to do because we think it's on brand and on purpose for us. And at the same time, it extends our ability to reach our audience and engage our users the way that we see fit. I mean, to keep this in the simplest of terms, this is a place where other companies can use our infrastructure, our KYC, our compliance, our license, and even the 100K guarantee that happens to the Dutch bank, the central bank, and then they can build on top of that. So that's what that bit
Yeah.
means.
But essentially, of course, for them, it's not as if they are consuming Bunq services. They are consuming services from partners of Bunq.
Well, I'd say primarily I mean, they're not consuming our services as a business customer using an account. They're consuming our services as a partner building on our infrastructure and APIs in order to extend those services to their customers.
Yep. The paper states that, I'm gonna read it out, it's a literal quote.
Yeah.
The expansion takes place against the backdrop of evolving open banking framework across the EU, which have broadened the conditions for third parties to access and build on licensed banking infrastructure. I kind of like that. I'm not sure whether one adds to the other, and that was maybe also one of the reasons why I want to have this conversation as we're working on a research paper on
Yeah.
open banking and embedded finance. So
Yeah.
my question to you would be, how important have these open banking regulations and directives been to Bunq in developing this new service, or could they have done without as well?
Well, I think this is about the. I'm going to answer the same way. Like again, 2 things can be true at the same time. Meaning that I think things like PSD2, upcoming PSD3, those things are very useful. And I think they sort of say to the world, banks should be able to extend themselves. And that's sort of a simple statement that they make. But to be fair, we didn't do this because of regulation. It wasn't driven by regulation. We were already building this openly and transparently prior to those types of regulatory. So it's not
And
pushed
probably
ahead.
also in other jurisdictions.
Yeah. So think of it like it's a complement to as
Yeah.
opposed to a reason for.
Right. But like being forced to comply with all these open banking regulations, has that facilitated the development of this new infrastructure? Or would you say that still it's like they didn't really relate?
I mean, let me think about the right way to answer this.
Yeah.
It's not the force to comply is not a reason to do it. No,
Yeah.
and the idea of extending into more users is the driving force behind
Yep.
why we do it.
Yeah.
It's complementary, I would say, is
Yeah.
the best way. Yeah.
Exactly.
So no, so it's not a. It wasn't. We didn't go like, oh, we're forced to do this. Oh, look, there's an opportunity. It was more like this is a direction we want to go.
Yeah.
This is a good match. Why
Yeah.
not?
Sure.
Yeah.
You already have one key partner. We'll discuss that later. But maybe a more open question. What's the kind of customers that you are targeting with this service? And I think you hinted towards that already in the very beginning.
Yeah. Having my afternoon coffee.
Yes.
I need coffee to talk to you, Rick, just so you know. So yes, I mean, yeah, I did hint at it in the sense that these are like-minded companies who are trying to serve the similar audience that we're serving. So that's going to be a prerequisite for any of these partnerships. These are partnerships. Make no mistake. This isn't everybody can buy this and walk
Yeah,
away.
no,
These take
exactly.
integration, they take time. So they're quite
Too many
involved.
responsibilities. Yeah.
Yeah, and it's cost on both sides. And
Right.
when we partner with someone, we obviously are owning compliance and KYC and things like that. So there's much to be considered in the partnership. So the companies that we will target, and it doesn't have to be hundreds of thousands of them, we'll be selective, will be ones that have a direction towards the user, that have a sort of a similar mindset on the priority of a user and a user's needs. And then ultimately they're extending, a service that a particular, already set of users would find beneficial. So I would say those are probably the primary criteria. Maybe the third one can be a little looser from time to time because, we want there to be a variety in that system and we want to grow this particular side of the business. But I would say we'd like to see all three of those line up.
Yeah. Yeah. You have one anchor partner at the moment. That is BlockRise.
Yep.
Why specifically them, and how successful is the partnership so far?
Yeah, I mean, look, Jos, the CEO of BlockRise, we all met some time ago. We got to know each other through, I actually think the first introduction came through the Tech Leap organization in the Netherlands.
Okay.
And then, sort of connected over and over and through time. So the relationship built slowly. And what he really wanted to do was to break down this barrier that exists between, to a sense, the sort of the Bitcoin of the crypto world and the banking world. You and I both know that, there's different licenses, different
Yeah.
setups.
Yeah.
And
Different
what he
cultures
saw
as well.
with
Yeah.
our Bunq as a service was an opportunity to sort of bridge those two worlds in a very smart and clear way. As a success definition, I think the public information is that currently 40% of all of his users have now moved over to a Bunq account. As that's a success story given
Amazing.
how short amount of
Yeah.
time that's been. And what you're seeing is that crypto would like, digital assets, I should say, would like to be considered a normal operating mode of the finance industry. It still has a level of risk and differences, and the regulatories are obviously very different for different reasons. However, when that money becomes fiat, there's no reason it cannot connect to a bank account and fall underneath the same guidelines. And we've just basically shortened the distance between those two things with Jos. And I think his technology and his team do a great job of sort of making that clear and easy for their users. And that's, of course, with our users, crypto is one of the things that they very much are interested in and they want to work with. So we have that provided, and Jos's world gives it sort of an extension to that.
Cool. Now, banking as a service evolved over the past 5 to 10 years. I think it used to be quite a big thing, quite a hype like the word AI is today. Many players trying to get a piece of the pie. And today we see a few players actually growing the pie. So the business, the market has grown, but the number of providers has decreased, which makes me think that there probably was a better timing to start this kind of service. So that got me to the next question. Why is Bunq trying this now?
Your observation is basically a consolidation statement that, lots and lots of different players. We had a few neobanks that came and went, and there's only a number of us that have the staying power and the ability to profit and growth from these markets and conditions. I think we're doing this now because it's a natural extension for us at this time. Capacity, size, capability. And I think there's a lot of things to consider when you want to offer this, and that is, look, the security components, the compliance components, those are all deeply, deeply serious.
Yeah.
So to just sort of throw that out there and not have, super concrete metal, safety things in place, I think it would have been, I don't know, foolish. So I think we felt that we've grown to the point where we can make this offer. We feel confident sharing it and sharing it at a level and scale in which it's bulletproof at this point, because I wouldn't want to put a risk on things. You and I both know that we're in this sort of arms race when it comes to security through AI, and this is a
Absolutely.
time when we have to be like, I think, the best user experience, but also the best tech is going to be the winning combination at some point.
Yeah. How do you see the market of bank as a service evolve in the coming years? Do you expect more consolidation in the space because of the increased expectations, or do you think it will evolve in a different way?
I think that none of us knew, 10 years ago that AI would become what it is. None of us knew. We didn't know that it would be easier to build things. We didn't know that technology would move at the pace that it's moving. And we also didn't know that having a banking license would create somewhat of a moat around a business, because that's, you would sometimes think of licensing and regulatory as a burden, but it's also obviously it's a protection for consumers and everyone else. So I think this space may have a little bit more consolidation, and I think you're going to have to really decide who you want to bet on. And I think you have to be able to bet on people whose technology is more advanced, who you don't have any risks if you want to partner with them on the back end. And so I expect the consolidation to continue, and I also expect it to be sort of banking as a service to become something that's more like the partnership model that we're putting forward rather than the pure white label model that we've seen in the past. I think if I have someone who's banking with 20 million customers, I feel pretty confident about their ability to scale and affect things more
Hmm.
so than I do with someone who's just building up a banking as a service from scratch.
Yeah. Maybe one last question. Deeper discussion and maybe challenging also the concept of partnership. Because some fintechs, they see banking as a service as a stepping stone. Once they've reached sufficient scale, they may decide to obtain their own license and bring more capabilities back in-house. How do you look at that evolution? Is your ideal customer, so an ideal customer of Bunq as a service, is that one who stays with Bunq for many, many years? Or is it one that eventually is able to scale beyond the need for bank as a service and trying to build those compliance and security s- solutions that he used to buy from Bunq, getting that in-house now?
That question is the eternal partnership question in almost any industry, right? Will your partners that you sign up today grow large enough to just replicate your services tomorrow? And the answer is always somewhat the same, which is not if you do an extraordinarily good job. In another sense, like, CRM systems they still exist in the world for sellers and things like that because they're a high specialty use case. And there's other main courses of business that people are in and they want to use this as a service.
Hmm.
I think we look at it the same way. One is I think we're squarely focused on our users and extending our reach and capabilities to our users. That's what we really care about the most. So if some of these partnerships end up being able to do that, then great. And if some of them grow and we help them grow, I mean, look, it's not stupid to improve the ecosystem and to grow the ecosystem. So we're group players. So I don't think that's the
Right.
worst thing that can happen.
Because
But I
after
do
all, I mean,
think
yeah, banking services also is something different than, for example, a bakery that starts selling like frozen pies and then decides to do something else later on. With banking, you see like business mature. At a certain moment, they go from startup phase to scale up phase and into more mature, proper bank solution. Perhaps even you see
yeah,
Revolut was a
and I
very
don't
good
think
example. And yeah,
I don't think that our partnerships would be to be the full white label back end for somebody whose core business is banking as a service. I think
exactly.
we have to be an extension of
Yeah.
someone other's core business. And that's the way you choose your partnership. So I think that's one level of protection. But again, I don't know, KYC, AML, compliance, time to market, all these things, giving it all integrated into MasterCard, Apple Pay, Google Pay, all of these
Yeah.
technology levels, plus the security stuff. I think there's a lot of great partners out there who are going to see that as the perfect relationship that they want to have for a very, very long time.
Well, Joe, thank you very much for the additional information on Bunq as a service. And well, have a lot of fun on holiday.
I will. Hey, Rick, nice to see you again, and thanks for having me.
I'll promise next time will take a bit longer before
That's
we
all
see
right.
each other again.
Efficiency is never to be criticized, my friend.